Welcome to a midweek Market Brief special. I'm Caroline Woods. As individuals, small businesses, whole industries, and entire states continue to struggle amid the COVID-19 pandemic, I'm joined now by experts who will shed light on the potential impact of bankruptcies across the nation and who can help you maneuver these turbulent times. My first guest is Marc Levine. He's former chairman of the Illinois State Board of Investment, where he oversaw nearly $20 billion on behalf of 165,000 state employees and retirees. As states like Illinois are forced to confront the prospects of bankruptcy, he's here with his perspective on the crisis. First of all, thanks so much for joining us again. Really appreciate it.
Thank you for having me.
So, Marc, what are the pros and cons of these state and local governments going bankrupt?
Right, so I've been really shocked at the reaction to Senator McConnell's suggestion. Right, watching these blue state governors across the country act like bankruptcy is the worst thing that ever happened. A lot of terrific companies like United Airlines, General Motors have actually gone through bankruptcy, come back very, very strong. Some of the most successful entrepreneurs in the history of our country, Walt Disney. Right, Henry Ford. In Silicon Valley, failing is actually viewed as a positive part of a learning process. So bankruptcy is a second chance. What's more American than that?
So should the government allow these states to go bankrupt?
I think it's the biggest gift they could ever give. So why do they need a second chance? So bankruptcy is there if you've made a bad decision, right? You made a bad decision and maybe you shouldn't pay for the rest of your life. Or maybe a company shouldn't completely be liquidated and sort of cease existing, right? In the case of both states and these municipalities, they've entered into these runaway liability defined pension plans. And so that one mistake that they really didn't understand, they had no idea that the sort of liabilities would keep growing. Here in Illinois, our state pension plans have promised over $500 billion of benefits to the beneficiaries over the next 25 years. We've set aside $90 billion. So you've got an over $400 billion gap. When you discount it, that's how you come out with the $150 billion numbers. And so think about it. We have a $40 billion state budget. So what the state of Illinois actually is an insolvent pension plan with a little itty bitty state government attached to it.
So what would bankruptcy do for this public sector pension crisis? Because in early December, you were on Market Brief and you said a bailout may be necessary. So where does it put us in terms of timeline for that bailout or grand bargain, as you called it?
Right, I did call it a grand bargain. That's a sort of trade between the federal government getting involved and maybe even putting in some money in exchange for freezing pension benefits, right, for removing these kind of crazy endless 3% raises that in the state of Illinois you get that compound every year. So a trade. Now the reason why bankruptcy is essential, I'm pretty excited about the suggestion because it actually enables a bargain like that. The problem that we have across the country, not just in Illinois, is that for us in 1970, which was by the way after the Beatles split up, there was an amendment to our state constitution which basically stopped any ability to reform the pension system. It said no diminishment or impairment of pension benefits. So we've got to get somehow, that was obviously a mistake, whether it was a drafting or whatever, we need to get to a place where the pensions can be reformed. By the way, I wouldn't necessarily want to be a municipal bondholder going into these types of restructurings either.
All right, we'll leave it there. Marc, thanks so much for joining us again. Always appreciate your insights.
Thank you, Caroline.
Now, as unemployment continues to increase here in the U.S., the number of mortgages going into forbearance is rising as well. There are approximately 1.5 million loans backed by Fannie Mae and Freddie Mac in forbearance. That's an increase of nearly 200,000 loans over last week's total. And of those loans, the unpaid principal balance stands at $346 billion. To put this data in focus, I'm joined by Gabriella Heffesse. She's Chief Operating Officer and Managing Director with ACG Analytics, a firm that helps fund managers and financial analysts understand investment strategies amid changes in public policy. Gabriella, thanks so much for joining us.
Absolutely happy to be here.
Fannie Mae and Freddie Mac have taken several big steps in order to help homeowners stay in their homes, but I guess at what cost? Will government-sponsored enterprises like Fannie and Freddie survive this crisis?
I think the answer is yes. I mean, in September, they had a letter agreement, so they were now able to build up capital. So they have the buffer there. They're going to have first quarter earnings, which shouldn't be that affected, come out this week. So that buffer will increase. And really, there are other safeguards in place. So we have some time before the actual credit event when the forbearances are up. And then at that time, if home prices don't go down significantly, there are safeguards. There are other layers before it actually hits Fannie and Freddie. You have the down payment, you have the amortization, you have CRTs, you have mortgage insurers. So it's not all on Fannie and Freddie, and really it becomes more systemic if you see a dramatic fall in home prices. And as of now, we're not there.
So then what steps can they take to continue their plan out of conservatorship so then they can then recapitalize? What's the timeline there?
Well, look, I think politically what we've seen is it's very important for Fannie and Freddie to have capital for countercyclical moments like this. We've seen rates go down from the Fed, but mortgage rates have stayed high because lenders don't have tighter standards in these economic downturns. This is exactly why we need Fannie and Freddie. So what we're about to see in May, perhaps June at the latest, is a capital rule to say how much capital will they need regulatorily to be able to be released from conservatorship.
All right, we have to leave it there. Gabriella, thanks so much for your insights.
Absolutely. Thank you for having me.
That concludes today's Market Brief. I'm Caroline Woods. As always, stay safe and healthy, and we'll see you on Monday for our next Market Brief.